Hey, what's going on everybody? Welcome back to the channel. I'm Waller's Wallet, and I thought in this video I would share and reveal my entire investment portfolio, go over my net worth, and a few goals that I have as well. Now, if you want a simple way to help out this channel, consider hitting that thumbs up button. Also, don't forget to subscribe to the channel and turn that bell notification on as well so you don't miss out on future videos. Now, when I say I'm looking at my entire portfolio, I am including my wife's numbers as well, since we are a team and we work at this together, and we do take that team approach when it comes to our finances. And when it comes to our investments, we have accounts with a few different banks. These range from Merrill Edge to Vanguard, Wealthfront, and a few others. And some of these are work-related retirement accounts, others are from rollovers, then we also have a few personal investment accounts as well. But I feel our investments are pretty simple and not too complicated, and I like it that way. And as long as I'm making money and hitting my goals, then I'm happy being boring. Now let's take a look at the portfolio. Now when it comes to my wife's work-related investments, her 401k currently is through Vanguard. And while it is with Vanguard, we don't have access to all their investment options, which I find a little disappointing because I would totally put our money into different funds like VT Sachs, for example. But we've been maxing out her 401k now for years, and she also does get a company match. And right now my wife's 401k balance in this account is just under $170,000. And over the last 2 years, this 401k has gone up almost $50,000 from investments return alone, and that makes me very happy to see. And the way I have this fund split up is about 15.5% in a CVS Health Fund stock, 21% in a core equity fund, 19% in a growth and income fund, 24% in a large cap growth, and about 20% in a target date fund. And when you look at the allocation, about 75% is currently in large US stocks, and about 15% is other stocks, which is really just a CVS Health Fund, and only 8% is in international stocks. And I do like to be more aggressive right now since we are in our early 30s, so over 97% of my wife's 401k is currently in stocks. And we have plenty of time in the market, so I'm fine being heavily involved in stocks. Although I probably should rebalance some to have more in international stocks as opposed to just US stocks. And despite the fact 2020 was a crappy year, the market had a great year, and our 401k in this account went up over 18%, and that's great. Then my wife's other 401k is currently sitting in her previous employer's account, and we just haven't rolled it over yet, and that's fine with me right now. Although I may roll it over some point later this year, but I'm not in a rush at the moment. And right now her 401k balance in this account is just under $43,000, and 100% of this is in the LifeFund 2020 Target Date Retirement Fund. And this fund is currently about 98% stocks, and these funds include stocks like Apple, Google, Tesla, and others. And the expense ratio I think is manageable at 0.16%, and the overall return was a little under 14% in 2020. Then for myself, when I started working as a pharmacist, I always maxed out my 401ks, and I made that a priority because when I maxed it out from the start, I never got used to living on that income, so I really couldn't miss something I never had. Plus it helped me save for later in life. It also reduced my tax burden, so there were a lot of benefits to this. But when I left my job as a pharmacist, I had different retirement accounts all over the place from different employers that I worked at. So I decided to roll most of my 401ks and 403bs into IRAs, and when I did this, I actually went with Merrill Edge. Now, I did this for a few reasons. First, it was fewer accounts I had to manage, which I liked. The funds I had access to were great funds. I could purchase ETFs at no additional cost, and this would also put me in the Platinum Honor status to boost my credit card reward rate. Then we also currently have our personal investment account and our kids' 529s with Merrill Edge. Now what's actually pretty cool is that the state of Maine does match money for our kids' 529 when we use Merrill Edge for our 529 account. So which is why I use Merrill Edge for their accounts. It's free money for us, so why would I not use it to help them out? But as far as my Merrill Edge account, the breakdown looks like this. Now for both my traditional and Roth IRA accounts, they're actually in the same funds. I have them in VFIFX, which is a Vanguard Target Retirement Fund Date for 2050, and in my traditional IRA, I also have one share of VTI. Now in purchasing a Vanguard fund with Merrill Edge, I did pay $20 to purchase that since I did not purchase it directly through Vanguard, and I was okay with that because I've made far more money with my credit card rewards as well as the bonus when I got that account. And for VFIFX, the allocation's over 90% stocks, about 9% bonds, and less 1% short-term reserves. So the fund is currently quite aggressive here with a lot of stocks. And VFIFX is made up of 4 different funds. 54% is in VTSMX, which is a total stock market index. About 37% is in VGTSX, which is a total international stock index. About 6.5% is in VTBIX, which is a total bond index. And about 3% is in VTIBX, which is an international bond index. And this fund has a manageable expense ratio of just 0.15%. Then the total amount of money between these 2 accounts is just under $140,000. And these IRAs went up about 18% in 2020. Again, it was a fantastic year in the market. Then for my cash management account, it's currently sitting at just under $31,000. But I've invested this money completely into VTI. Now, I like VTI since it's well diversified among different stocks and it matches the S&P. And it pays me a dividend as well, and I reinvest that dividend back into my portfolio. And the expense ratio is extremely low at only 0.03%. And right now I have 155 shares of VTI in this account. And in 2020, this increased an insane 24%. But if you look at my allocation chart for Merrill Edge, my entire breakdown is 62% US stocks, 30% international stocks, and about 7% fixed income. Then I also have an older 403B account which never finished rolling over from Fidelity. I kept getting errors, so I just kept it there for the time being. And I have this invested in VFFVX, which is a target retirement fund date for 2055. And this is currently broken down into 90% stocks, 9% bonds, and 1% short-term reserves. Now the breakdown of this account is pretty much the exact same as my VFIFX account with Merrill Edge. It's the same funds and basically the same percentages, and again the expense ratio is only 0.15%. Now this currently sits around $5,700 in this account, and this went up over 16% in 2020. Now I would like to roll this out in 2021 because I would like to consolidate things to fewer institutions, making my life just a little bit easier. Now in both instances with my Vanguard accounts, the expense ratio is 0.15%, which I am perfectly fine paying since the fund will rebalance itself and I don't have to do it myself. Because this saves me time and I'm perfectly fine with that. Some people like to rebalance their portfolios themselves, but for simplicity's sake, I find it worth it. Then most recently, I started using Wealthfront because I like the idea of robo-investing handling my investments, and I also like the fact that they take care of things like tax loss harvesting and other things when you reach certain financial levels with them without me needing to do it. Because between raising 2 kids and making videos and managing this channel, plus keeping my trophy husband physique, and my life in general, my time is pretty limited. So I have been shifting more of my personal investments over to Wealthfront to handle this for me because this saves me time and my time is valuable. And if Bank of America decides to do anything stupid with the preferred reward program, odds are I'm going to shift all of my investments over to Wealthfront because I really like how they diversify my money and put them into cost-effective funds from Vanguard, Schwab, and iShares. And I currently have my risk tolerance set at a 10 out of 10. And the breakdown of the investments is 35% US stocks, 31% foreign stocks, 20% emerging markets, 10% dividend stocks, as well as 4% municipal bonds. Now, they do charge a 0.25% fee for management, but that's lower than what you would get from any financial advisor. And my money is currently invested in VTI, SCHB, VEA, SCHF, VWO, VIG, SCHD, TFI, and VTEB, so it is spread out over multiple funds. And at the moment, I have about $5,100 in my Wealthfront account, but I also do have a reoccurring deposit of $500 set up each month as well. Then I also have 50 shares of Apple stock that are split between SoFi and Webull, and this isn't making me a whole lot of anything right now, but these current stocks total just a little over $6,400. And this was money that we've made back from our cashback credit card rewards and from referrals on Webull, for example. And this was just sitting there to make me money while we're currently not traveling. Although I am strongly considering moving this money over to Wealthfront as well. Then over in my Robinhood account, I have a few shares of AstraZeneca totaling about $360 and a few shares of GlaxoSmithKline as well, valued a little over $300. And this again was money from my travel fund and other referrals as well. And odds are I'll probably sell these shares and move that money over to Wealthfront as well. But that's it when it comes to our long-term investments, and you can see it's not anything too crazy or special. Now, while I could be investing more money into the market, we're actually putting more money towards our mortgage so we can pay that off sooner, and we're projecting to have that paid off within the next 3 to 4 years. Ideally, it'll be paid off by the time we're 35. And once that happens, we'll be throwing a lot more money into the market. And while some people would argue I could be making more money putting my money into the stock market right now, we would rather pay off our house and have more financial freedom here. And if you notice, most of our money is tied up into index funds or target date funds, which is split up into different index funds. So by all means, we're pretty boring. But being boring in investing is fine by me since I'm making money and getting closer to my goals. And trying to out-earn the market by picking individual stocks just isn't worth it in my opinion, especially if I can just put my money into a fund and it grows over time. This is a long game. It's not a get-rich-quick scheme. And having my money compound, plus add in dollar cost averaging, this works out well for us, and I'm happy with that. So in total, when looking at our investments, my wife and I accounts total right around $400,000, which I think is pretty good considering the fact we're in our early 30s. And when you account for our house as well, we owe just under $150,000 on it, and it's worth between $230,000 to $250,000 depending on what website you look at. So this puts our overall net worth in the ballpark of about $500,000. Now, my wife and I, we have worked pretty hard to be at this point where we're at right now. We've always made it a point to save for retirement even while paying off our $300,000 in student loan debt in just 5 years, as well as other expenses. Plus we've built up our emergency fund as well. And we've set ourselves up this way so I could stay home and raise our kids while also trying to grow this YouTube channel. But we do have a goal of having a net worth of $1 million by the time we're 40. And I do believe we'll reach that, and I do think we'll reach it before we're 40 years old. Because we do max out our 401ks and IRAs each year, plus we put money in investments beyond those retirement accounts. And if the market dips, I'm not too worried because we're young and that just means to buy more at that time. And because we live a low-key lifestyle, we should potentially have enough money to retire completely and comfortably in our mid-40s. So there you have it. That's my entire investment portfolio. And as you can see, I'm boring and I like to keep things fairly simple and use cost-effective funds. And while I could maybe shave off some of those fees by managing those funds myself, the time savings I find to be worth it for the small increase in fees. But for some of you, you may want to be more active in managing those accounts, and there's nothing wrong with that. But overall, I'm happy with my selections and my investments, and I'm on track to hit my goals, which as long as you're reaching your goals, that's really all that matters. So tell me, what do you think of my portfolio investment? Hey everyone, thanks for tuning in this video. If you want to help support the channel, take a look at the links down in the description below. And if you know somebody that could benefit from this video, feel free to share it with them. And until next time, safe travel and take care.